California's insurance commissioner has introduced a plan to address the ongoing home insurance crisis. This week, Commissioner Ricardo Lara unveiled the Sustainable Insurance Strategy. It's a series of reforms designed to get insurers to continue writing new policies in the state. Some major companies have stopped renewing policies because of the risk of devastating wildfires. Among other things, this plan would allow insurance companies to use a forward-looking catastrophe model to calculate rates. Right now, rates are set by evaluating historical data. For more on what these proposed changes will look like, let's bring in insurance expert Karl Susman from the Susman Insurance Agency. Karl, it's good to have you on. We appreciate the time. We do know these reforms are expected to lead to rate increases across the board. First off, how much more do we think homeowners should expect to pay for coverage if this plan is implemented?
Well, thanks, Alex, for having me. I was watching the weather forecast thinking, well, rain is good right now. That might, maybe not this much, but it'll certainly help with some of these fires that are still burning. We've had over 1 million acres burned so far this year, so it's still shocking when we stop and look at the numbers. As far as the regulations go, the regulations are designed to bring insurance companies back to writing business in California. Right now, there is about less than 10% of the insurance market open for business. So we have no competition, basically. We have the California Fair Plan growing. So I think what we are anticipating now when these guidelines finally go into place is we're going to see the return of the competition to California. The carriers will come back, start writing and competing for business. We definitely have higher rates right now, but that's because the risks are higher, not because the carriers are, or because the Department of Insurance is allowing rates to just arbitrarily go up. But I'm pretty confident that once we have carriers writing again and competition starts to do its thing, we'll be able to see rates actually start coming down from where they are today.
So what you're saying, in essence, is we may see sort of a spike in rates initially. If this plan goes through and insurers are allowed more flexibility to raise their rates, we may see a big jump in those rates. But you're saying once you get more folks back into the market, things settle down.
I couldn't put it any better than that. Exactly the case. We're seeing artificially high rates right now because we have no competition. Right. If you call around and try and get quotes for home insurance, you will realize that there is no market for that. So obviously the carriers that are left are charging higher rates. Once we have all of those companies come back, remember, California is a huge market. They would like to be writing here if they can. Once they come back and start competing again, we'll see those rates come back. We're not going to see them coming back to rates that we had 5 or 6 years ago, but the risks aren't the same as they were 5 or 6 years ago either.
All right. So what would this reform plan require of insurers? What would they have to do to increase the availability of insurance for people across California, whether or not you live in a high-risk area?
Well, these regulations are putting a lot of pressure on the carriers. They're being forced to write in areas that they otherwise were not even writing in before, that are what are called distressed areas. That might be an area either that's high risk for fire or simply an area that does not have a lot of carriers writing business in. They're going to be forced to write in all of those areas. And the exchange is sort of a give and take, is that they're going to be allowed to utilize what you heard earlier today, the models that are being used for flood damage. You heard someone speaking about earlier. They're going to be using similar models for wildfire, since obviously 10 years ago is not what we're seeing today. So they're getting the ability to properly underwrite, and in exchange they are being told they have to write more insurance.
Yeah, and we know that one part of this new strategy, this plan that's been put forward by the insurance commissioner, is what we call that forward-looking catastrophe model that insurance companies really want to lean into here. What exactly does that look like, and how will it help these companies to set their rates in a different way?
Well, historically, we've been able to look backward 10 years and say, well, what happened 10 years ago, we can estimate it's going to be similar to what we're going to see going forward. In every other state in the country, carriers are allowed to utilize the ability to look forward, to use predictive modeling, to say, okay, we may not have seen a fire in that particular area, but, and they can look at all the data, they can look at the weather patterns, and they can make predictions based on that. So California carriers that do follow the new rules and they write more insurance, they write in more areas, are going to be permitted to submit their own type of modeling for that. The department still has to approve them. They still can say, no, we don't like that model. They're going to be able to see the intricacies of it. And hopefully, again, the idea is that by giving them the flexibility to write risks more accurately, that will enable more carriers to write and more competition to start writing in California.
Yeah, and it's interesting, Insurance Commissioner Ricardo Lara does acknowledge that the plan he's put forth does favor insurance companies. But in essence, he's saying this is what we have to do right now if we want to get back to a threat thriving home insurance market in California, and he believes that we could see something like that by the middle of next year. Do you think that's possible, that we see things turn around that quickly?
I've spoken to him and I've heard him speak, and he is